Morning accounting students, this is Mr. Chauke. In today's lesson we're going to be focusing on how to prepare the ordinary share capital. But before we do that, I want us to go through some theoretical concepts of this activity that we are supposed to do. Here they're saying complete each of the following statements by choosing a word from the list below. Write only the words next to the question numbers, and then so we're going to read all these statements and determine what is the best concept that suits this. Okay, here they're saying that they are employed by the company to set up and monitor processes. The answer will be internal auditors, because remember, as a company we hire internal auditors to make sure that they are helping us to follow gap principles, things like that. Or they are going to help us to make sure that we're running our business in terms of accounting according to IFRS and also gap principles. And then the next concept says that are appointed to give an unbiased opinion on the financial statements. This one will be external auditors. External auditors are appointed so that they can give us an opinion that is based on facts on our financial statements. Okay, so their but again, their opinion will not be it has nothing to do with feelings. They give us an opinion based on the facts that they have from the financial statements, hence they're saying that is an unbiased opinion. And then the last one says that particular people are appointed by the owners of the company to perform key management functions. This one will be directors. As shareholders will hire directors so that they can do the basic management functions in the business, like being responsible for running the company, checking that everything is running well on a day-to-day basis. So these are some of the things that they mostly ask, and you need to remember that. And then here they say Prudence Ltd, the information relates to the financial year ended 28 February 2022. I said when the information is like this, you need to make sure that you always establish your financial period. So we need to know that from what we have here, when does our year start and end. So if it starts on if the year starts on 21 it ends on 28 February 2022, it will start on 1 March 20. And this information is very important to be able to do our calculations correctly. So now the ordinary share capital note that we're supposed to do is only taking 7 marks, but mostly in the exam it's around 13, 10. So like it takes most of the marks on the balance sheet. So let's go to the questions. Now here we are given the trial balance, which is supposed to help us to prepare our ordinary share capital. We don't have the balance at the beginning of the year, we have the balance at the end, which is also written for us in the answer sheet. Now this will simply mean to us that the opening balance is the balancing figure, or that's what we are going to look for actually. Okay, so now let's go to the adjustments that affect our ordinary share capital. Now I mostly advise learners to also make sure that they look at the answer sheet so that they can get an idea of what they have and what they don't have. If you look at this, you realize that you are given the monetary value of the ordinary share capital, so meaning that you have to look for the number of shares. Okay, so now let's check here what's happening. We're going to read our information bit by bit. Here they're saying on 1 March 2021, 75% of the authorized share capital of 1,200,000 were in issue. This simply means that at the beginning of the year, they had only issued 75% of the authorized share capital that they had. Remember, I said that authorized share capital, it means that this is the maximum number of shares that the company can issue. So out of that 1,200,000, they were only allowed to issue 1,200,000, but out of that they only issued 75%. So for you to be able to get the number of shares, you are going to say 1,200,000 like I wrote here, and then you multiply it by 75%, and this will give you the number of shares. So let's see, 1,200,000 multiplied by 0.75, it is giving us 900,000 issued shares. So meaning that at the beginning of the year 900,000 shares were issued. So here we're going to have 900,000, and then you're going to get a mark for just writing this 900,000, and then here we can say issued at, but remember we don't have that now, so we will leave this part for now. Okay, so let's go back to our information now. The next part says that on 30 August 2021, 80,000 shares were repurchased from a retired shareholder. Okay, they were repurchased from a retired shareholder, and then he was paid 20% above the average price and will no longer qualify for dividend. So here what they're saying to us is that this person was paid 136,000 in a form of money, but this was 20% more than the average price. Now for me, what I do when the information is like this, I try to write this in a normal way. I know 20% is 20 out of 100, so it means I need to get my 100% first, okay, which will be my average share price. Now for you to be able to do that, you're going to write down the information that you have, and then in these questions you need to also apply what you learned from the prior years. Okay, now in the information they told us that barking the difference, remember the difference, they said is equal to, and then in a form of it's very important. Remember, whenever we deal with the repurchase of shares, we have to look for the average. Now we have this our ordinary share and then price plus the difference will now we also have now the question is, what are we then going to do? I would say relate this into cost price. Think about the difference, the amount. They said this was above the average price by 20%. Think about this as the profit that those people made when they were selling these shares. Okay, so which means that then our average price will be 100%. Our difference, which I said you the profit. Now, which means repurchase price is 100. Okay. Now remember, when you normally sell something, you take your cost, right, and then you add the profit that you want to make, and then from there the final, it gives you the selling price that you're going to use. Now the selling price in this case for us, because we are dealing with ordinary share capital, we can relate it to the repurchase price. Okay, now we know that the average price 100% because we want to get what was that amount. Okay, so which means we have to remember one over want something, so question is what are we given? Okay, going to divide it by 10%, but we want to be able to get this in a form of rent. We need to bargain to convert this to rent. Okay, bargain, we need to compare it to the average price per share. I don't know if you get what I'm saying. So we're going to take this 136,000 and then we divide it by the number of shares that we repurchased, which is 80,000. It then gives us 170. Remember, this 170 still represents the 20%. Here, multiply run and will be going to get what by 20 multiply by 1.70 is giving us 8 rand 50. Okay, it is giving us 8 rand 50. So Now, to ask the average price, we ask our repurchase price, but this will only affect the bank account, and we're not dealing with the bank account here. So it means that these shares were bought back at 10 rand 20. Okay, now we have that information. We know that they were bought back at 10 rand 20, but we are interested in the average price because that's what we are going to need to use in our ordinary share capital note. So since we've calculated this, we can then safely go to our answer sheet and say, in terms of repurchased shares, remember it's supposed to be minus 80,000 because we are purchased. Okay, here I'm going to say shares re so we're going to say now 80,000 multiplied by 8 rand 50, and then it will give us the total repurchase price, the total repurchased price in terms of using the average share price. So 80,000 multiplied by 8 rand 50, we're getting 680,000. Okay, so you're going to write 680,000 here, and this part will have 2 marks because you have 2 calculations to get this 8 rand 50. Try to show them somewhere on your answer sheet. So we now have what we're supposed to have here. And then remember also, these shares that were available at the beginning, they were also issued at an average price because a number of shares have been issued, different categories of shares have been issued. So what we're going to do here, we're also going to multiply 900,000 by 8 rand 50. Okay, so let's see, 900,000 multiplied by 8 rand 50, it is giving us 7,650,000. So we do have the answer here. So now we can then go to the information and check if there's anything else that happened that's going to help us to find the answer for here. Now here they're saying that on the 1st of August, an additional 150,000 shares were issued. And if you look at this, we're not given the amount, which means that this is our this is our balancing figure. So let's check how we can work that out quickly. So here we know that we have an additional 150,000 shares that were issued, right? Remember, it will be this minus this, and then this will be a plus because you see there's no negative sign next to it. Okay, now these shares, we don't know how much were they issued at, so we can just say issued at, and then we'll look for the amount later on. So now let's check. 900,000 minus 80,000 and then plus that 150,000 that was issued, then we're getting 970,000 issued shares at the end of the year. Okay, we can say that we issued if possible, try to do it. Okay, now let's see, we are going to try and balance. You remember that the normal way when we do this, we will normally say that the opening balance, this, we'll say this minus this, then what we want here, it give us this. The rules are changing. We are going to start from the bottom, we're going to take this. Okay, so it's going to be this minus, okay, but then here there's nothing, so we won't have a figure. We won't use this because there's nothing, remember. So it's going to be this plus this here, and then we minus the opening balance. So in other words, we are going to say 7,954,000 600,000 subtract 7,600,000 the amount that we're supposed to get for here. So let's do it quickly. 7,954,000 plus 680,000, and then we minus 7,650,000. Remember here we're using what we call the bottom up method, meaning that we are moving from here going up to get what we want. Okay, now we have 980,000 here. What was the issued price? So what we can do, we can take this 984,000 and divide it by 150,000. Okay, so we can say this answer divide by 150,000 so that we can get the price. So meaning that the shares were issued at 6 rand 56, and then from there you are done with the ordinary share capital. Now what is the most important thing that we have learned here is to know how to calculate using the information that is given to us. If you want me to help you with this on a personal level, you're more than welcome to contact me using the details that I've provided in the description of this video. Thank you so much. May God richly bless you. Shalom.